welcome to another episode of the Fort Wayne Local Podcast. I'm your host, Jake McAfee. Today we have our fan favorite guest, Drew Wiard. Drew, how you doing?
I'm good, Jake. Thanks for having me back.
Definitely. So Drew was a guest on episode 7 and 17. So if you want to go back and listen to those, that'll have more of his background and, some of the basics and the foundation of who he is. He's also the market clinical pharmacy director for Lutheran Health. He's an avid and an active investor. He's the founder of Fort Wayne REIA. That's the Real Estate Investor Association. They meet every Wednesday. The first Wednesday of every month. And if you go back to our first episode, on episode 7, he goes into more detail about what that is and, who it's for and why it's beneficial. He's been a guest on the Bigger Pockets podcast, which is an incredible accomplishment. That was kind of how I got started off in real estate investing. So today we're going to talk about a couple things. I want to kind of recap what we talked about last time. I want to kind of see what you see coming for 2022. We obviously got the new year right around the corner. And then we'll touch on something you had mentioned in our last interview regarding industrial flex space. So we can go into those topics. But first off, just to remind everyone, so when Drew and I last spoke, I believe it was May, at that time, there was a half a month of inventory. So what that means is if no new properties come on the market, a balanced market takes 6 months to sell everything off. We had a half a month. So it was absolutely scorching hot. I remember telling you, I just showed a property like the night before, and there was like 21 other people in the house while we were there. Just nuts. Now we've slowed a hair, but not slow. We've got 1 month of inventory in September. So it's doubled, but still historically low. So that kind of sets the table. So at the time you had the goal of buying more single family and some nicer multifamily. Are you still buying single family even in this hot market?
Yeah, absolutely. It's funny you mention it. We close on 2 of them. One was last week. There's another one coming this next week. And we already kind of have some plans and exit strategies on board for those. But yeah, we continue to market for those, and they work so well in Fort Wayne. They're super hard to find, but when you find them, then they work real well. So we're going to keep doing that.
And do you get any of these off the MLS, or are these all off market, marketing directly to sellers?
Yeah, I've been investing about 5 years, and in the first 2 to 3 years, we were able to find some MLS deals. But the last 2 years, I don't think I bought a single thing off the MLS. Most of it either pocket listings from realtors like yourself, or people I've worked with in the past. Maybe there's another investor who finds a deal, but they don't have the pockets deep enough to close it. So maybe we'll collaborate on it. And then we market directly to sellers quite a bit.
Okay. And you had just bought your first commercial property. How's that one going? How did that work out? You just bought it. I think you said you needed to put some money into it.
Yep, that's exactly right. It's gone incredibly well, actually. So we finished the work that we needed to do. Of course, the market has been really tough trying to find contractors, and we needed to reside this whole building. So half of the time lost was just looking for the right contractor to do the job, but got that done. And we rented it out on not a triple net lease, but like a double net lease, which is good. That's kind of the exercise I wanted to go through to build my skills and kind of learn what that looked like. And tenants been in there, and it's been humming. It's doing really, really well.
I think I want to just touch on something a minute. Like, as accomplished as you are, as ambitious as you are, what I heard you just say was you were doing this to learn. You're not like a know-it-all guy. You're like, hey, I want to get better at that. I'm going to try this and figure it out and probably stub your toe here and there. And, see what's something that you took away from that? Like, just, what's a lesson? You're like, all right, if I buy the next one, I need to make sure I do X, Y, Z.
Oh, sure. As well, as far as, just the learning concept, I think when a lot of investors jump into investing, there's 1,000,001 ways to make money in real estate. And a lot of people get kind of that, shiny object syndrome, I guess, where they want to do rentals and then flips and then lease options and then commercial. And it's real easy to not focus. And so at least my strategy has been find that one thing that you want to learn, do it 1 or 2, 3 times until you know how to do it. And then you can put that tool back in the toolbox and start developing the next tool. And that's kind of how I've strategized around this one. But lessons learned, Probably the contractors again, because it should have been intuitive to me, but I hadn't realized that the permitting for residential versus commercial and industrial can be much more costly, much more rigorous. There's fewer contractors who are licensed to do that kind of work. So in the future, I'll just know that I probably need to go talk to some of the bigger, probably companies that you hear about, as opposed to, Bob the Builder or the Fix-It guy who can just come in and help you with some of that stuff.
Okay. And you had also said you were looking to analyze one commercial property deal a week. How has that been going? Have you stuck with that?
Yeah, that and then some. Yeah, I'll try to put a real small, a long story in a really small box. In the last 90 to 120 days, I have a new partner that I'm working with here in town. And he's done some industrial stuff in the past, and I've done all residential. We've come together and really kind of blown up our goals of what we want to do. And we're buying a lot of some commercial, but I think our goal is kind of that industrial flex building. And what that means for people is it's generally like a warehouse. It might have truck bays or like delivery doors for semis and things like that in the back. Sometimes there's an office up front for like a showroom, something like that. Like maybe a tenant who wants to sell tile flooring, right? Or marble countertops, right? They'll have a showroom up front where people can come visit, but in the back, then you have just storage. And so the last couple of months, my partner and I have locked down 3 big deals. One is in South Bend, which we're very excited about. We've got one just across the Illinois, Indiana border that will close by the end of the year. And then there's one just about an hour or two south of Fort Wayne that we're also very excited about. So
okay,
big stuff for us.
And are you, I'm sure you'd prefer to be in Fort Wayne, but are you kind of just going where the opportunity is? If you see something, you're making a move on it, or are you intentionally diversifying in different markets?
Well, there is a little safety in diversifying in different markets. Of course, I love being in Fort Wayne because Fort Wayne has incredible momentum, and it'd be nice to have it right in the backyard. But with that momentum, it means it's tougher to find deals right here. And so it'd be nice if it were close, but it's really more a matter of we have very strict criteria. And so we will cast a wide net with very specific criteria. So we have been marketing to cities as far away as Memphis and Kansas City and all of that. And haven't gotten anything that far away, but we're open to it if it's the right product and the numbers are right.
And do you go and like look at them yourself personally, or do you have like a team that you lean on for that? Or what's the next step? Like, let's say a seller responds, you're like, man, this on paper, this thing works. What's the next step from there?
Yeah, I think it's essential to figure out what it really looks like when you get there, because lots of things pencil out nicely, but then you find surprises when you get there in person. So South Bend and the one south of here, we've been there in person. We've been able to walk it. The Illinois one is actually closer to St. Louis. It's about an hour away from St. Louis, and I haven't had a chance to get down there. So I actually paid a third party to go in with the broker and take hundreds of photographs. And that, I think that's going to satisfy our need for walking it. We will eventually make it down there, but it might not be until after the holiday.
Okay. And what does analyzing a deal mean? You said you wanted to analyze a deal a week. What does that actually mean?
Sure. So it's a little different than it would be for residential. If you're looking at residential houses, you want to flip something, you want to rent something, you're really going to look at comps. You're going to look at the houses in the neighborhood that are similar to yours and what they're selling at, because that's how an appraiser or the bank will put a value on a residential property. On the commercial side, it's really all about how it performs. And when you're trying to figure out how it performs, I'm talking about money in and money out. And so it will have to meet certain metrics. And so for us, what I've had to learn is when you're buying these properties, yes, you're buying the building, and that's an important aspect, but what you're really buying is a stream of cash flow. You're buying an income, and that income comes from the tenants and the leases that are there. So it's really a deep dive on the leases. If someone has 2 buildings right next to each other and they're identical, they theoretically would be the same value. Someone that has a lease where the rent is half as much and it expires in half a year, is a totally different valuation of that property than someone who's been in the property or is going to be there for the next 5 years, and they have a current market rent with rent bumps that go up the next couple of years. And so it's a very, very different analysis that I've had to learn.
Do you have a preference on, are you looking for something that's more stable, plug and play? Or are you looking for the one where maybe undermanaged leases coming up, there's value add, and then you can kind of turn the rents higher from there? What do you prefer?
Yeah, that's a great question. And for me, the reason I'm moving towards the asset class is as I get older and I want to work less, I want it to be as passive as is possible. So stabilized properties, places that have rents out for several years, that really appeals to me, but they cost more. Mm-hmm. So for now, across the 3 buildings that I mentioned, we have, it's kind of a mix of value add, meaning we're going to increase the rents. We're going to put new tenants in. Some people will leave. Some new people will come. That's kind of what our South Bend project is. Whereas Illinois is a project where they have been there for 15 years. It's a nationally traded tenant. And they have 5 years left on the lease with another 5-year option to renew. So we could literally sit on that for 10 years. And so that's why I say we're buying the income stream for the next 10 years. So we like to do a little bit of both. I think on the front end, we like that value add because we're focused and we have energy and we want to reposition and get some value, but we'll reposition it and then probably just set on it so that we can sit back and relax as we get older and want to spend time with our kids and all that kind of stuff.
I gotcha. And how much time does it take you every week to analyze these deals?
So admittedly, my partner does a lot more of the analysis now than I do. He'll do the first pass and then we'll bring it together and go through it. And so he and I have a 1 to 2 hour meeting 2 times a week, but then we have tasks that we follow up on. More of my focus really has to do with raising private money for our deals. And we do a whole lot of that. The South Bend deal, for example, was about a $1.3 million deal. And we needed to raise $350,000 from private investors to get that one closed. And we were able to do that. And now our investors are getting that mailbox money every month. And that's kind of more where I live.
Sure. And I was drilling down intentionally because I want people to hear, I know, with this market being this hot and money is everywhere, there's so many people jumping in. And I really wanted people to hear that, like, you have a system, you're putting in work. I mean, would you say twice a week, 1 to 2 hours, and then you follow up? I mean, that's a pretty significant amount of time especially for a busy person. And that's just deal analyzing. And that only got you 3. So that means you've put a ton of legwork in to be able to pull the trigger on something. And then you have a process that once you have identified a deal, you know how to move on it. And I think if I want to speak to people who are jumping in or maybe not as experienced, really listen, this guy is seasoned and this is what he's doing. And you need to find your own version of that, whatever that is, but be able to articulate what you're looking for and then have a plan and a system in place to execute on it. So thanks for, being transparent on that. I really wanted to kind of drill down on that.
Yeah, you're welcome.
Okay. So we'll get back to that. I wanted to keep catching up from last time. So you would encourage people to start setting up lines of credit and storing cash. Because again, the market was like crazy hot. Were you still doing the same? I know you said you were trying to refi and tap into your lines of credit. Were you able to execute on all that?
I was, and I think my advice is similar, but I'll paint a little more color on it if that's okay.
Yeah.
Last time when we were in May, we were talking about inflation quite a bit because it just all of a sudden spiked. Well, it has quelled a little bit, but now it's starting to ramp up again. And so what does that mean for us? Well, if you think the market's really going to tank, it's good to have cash or at least access to cash. So I wouldn't tell people that they should sit on, it depends on where you're at, right? If you have a lot of properties like me, I need to stay liquid enough to cover all those. But if you have a couple of rentals, make sure that you've got 6 months worth of coverage as far as cash. But I wouldn't necessarily sit back and wait for the market to crash so that you can then invest. That's a question I get all the time is, should I just wait? Or they tell me I'm waiting until the next crash happens. And I'm not convinced it's coming. I think we'll have significant market downturn, but I don't know that property values are ever going to plummet like we saw them in 2008. So my advice to people today is 6 months worth of cash reserves. If you have access to lines of credit, now's the time to get it before the banks change their mind. The other thing that is of value is really locking in those refinances, or setting up loans on properties today with as fixed a rate as you can, because we have historically low, cheap money, and it's been that way for a while, but it won't be a fast creep, but it's going to start creeping up. As inflation goes higher, they need to stimulate the market. And again, I'm not a market analyst, but they're anticipating some rate creep. The other thing is when inflation goes high, you want to buy properties at today's values, because in 5 years, prices could go up 150% or 200%, but you're still locked in at the power of $2021. And so that's kind of what I'm focusing on, is acquiring as much as I can, as long as it's a good deal, locking in great terms. And then if the market turns, I might not buy anything for a year or 2 or 3 while I just sit and work on the stuff that I've got.
Okay. Yeah, that was going to be my next question, because inflation is definitely here. And so it sounds like you're just investing in what you see as assets that will inflate with it, and the values will go up and the cash flow will go up. I got you. Is there anything else, any other steps you're putting in place to hedge against inflation?
Not other than locking in today's money as best as I can. And I want to get as long as a lock on that rate as possible. When you get a mortgage for your home or sometimes your investment properties, you can get a 30-year fixed, and that's very common. In the commercial space, it usually resets every 5 years. Sometimes you can get a 7-year, but I'm doing everything I can to refinance now and reset my 5 years, and if a year from now rates are still where they're at, I might do it again just to get another push out, because I do think we'll see rate creep.
Okay. And do you have relationships with specific banks, or do you shop around when it comes time to refi?
Yeah, that's a really good question. I don't think you should have one relationship that you lean on, because if that relationship goes sour, or that bank decides that they're just not going to lend on that asset anymore, which has happened to me and others, then you're kind of stuck. What I don't think people should do is, I don't think you should shop around every single time you need a loan. I would tell you to have probably 3 relationships that you're going to put time and energy in. A guy or gal that really knows your business, and try to work with each of the 3 of them. But if you go shop around and, if you set it up with bank A and then you refinance with bank B and then you go to C and then back to A, that might sour some relationships. And so for me, I want to pay as low a rate as I can. But if I have to pay a quarter of a point more to be with someone I have a relationship with for the sake of that relationship, I'm inclined to do it.
Sure. I'm the same way on the retail side. We have a team here, and we have tried to stay loyal to vendors because I want to be a priority. And I think it's very arrogant, honestly, to think you're going to be a priority if you're doing what you said, if you're always looking for the lowest rate, if you're willing to just cut someone out. I think creating the relationships is like the longer term goal. And then as I get more, I'd be willing to, start looking at new vendors. And it sounds like that's the same philosophy you have, where you're thinking long term down the road, especially if there is a downturn. I mean, if you need these banks to work with you, a long track record that's positive will really play in your favor.
Yeah, it absolutely will. And I think we're of the same mind. The relationship is worth paying a little for. Don't put all your eggs in one basket, but have a few vendors you like and stick with them.
That's great. That's great advice. All right. So let's kind of shift to 2022. I think we kind of touched on some of it, but what are some of your business goals heading into the year?
Really good question. So when it comes to my investing, there are a couple of there's really like 4 legs to the stool, right? There's my rentals, and we have about 50 doors, give or take. We have Clear Sky Properties, which is acquiring new single family homes. We have Clear Sky Commercial, which is the commercial properties we talked about. And then we have some of the apartment syndications in Phoenix that we do. And so I have goals and attention set on each one of them. With the rentals, I keep getting the question of, are you going to sell your rentals? The market's screaming hot. And I think about it, but I don't think the value of the houses are going to come down. Mm-hmm. So I don't feel like I need to rush. And right now I've locked in those low rates And, that portfolio is paid down by about 50% and rents just keep going up. So right now it's working. So my goal for the rental portfolio is just to maintain. For Clear Sky Properties, we have some very specific goals. I want to have 4 acquisitions on the residential side every single month going into 22. And we've done that a couple of months. Usually we have 1 or 2, a couple of months we've hit 4, but I want that to be the standard for us going forward. On the commercial side, we need to lock in the 2 remaining properties that we've got. And then we have some very specific goals about scaling up, and maybe instead of a $1 million property, maybe that's a $5 million or a $10 million property. And we would need to bring in equity partners along with us to help with that. And again, more opportunity for private money investors in that avenue. And then with Phoenix, we have 1 deal right now that's it will close in January. We've almost raised everything that we need for that. Still have a little bit room left, but I think our big goal for that one is to acquire this one we're working on and then sell one of the other ones that we have probably in the spring.
Okay. And just going back to the single family, you'd said 4 acquisitions a month. Mm-hmm. You had been hitting 1 or 2, a couple times 4. What have you put in place to make it different than the 1 or 2? Like how are you tactically making it happen?
Yeah, people is 100%. In times past, it's been me exclusively. And, on top of all this real estate, I still practice medicine full-time at the hospital. And so trying to be able to do all these things, I can, like I talked about building the tool before, I can build the tool, but on that one, it's a very active business, right? So if I put that tool back in the toolbox, nothing happens with it. So we've been starting to build out our team. I have a personal assistant who's been helping on a lot of fronts, but she's going to be helping on that one. We have a new acquisitions manager that's going to be starting in the next week. And then I have a couple of strategic partners in counties to the north and counties to the south who are going to be boots on the ground for those counties, which we haven't ever even marketed to before, or marketed very little, because I know that I can't drive out there. Mm-hmm. So that's going very well so far, but it's really a strategy about building small team and mobilizing that team.
Okay. And then without getting into like too much specifics, how are you compensating them? Is it straight salary, or is it like salary plus commission, or how does that work? Because I think I'm just playing devil's advocate. I know what an investor might think, especially if they've used to doing it themselves. They're like, well, I have the hustle. I know this stuff. I can do it myself. I don't want somebody to miss an opportunity. How are you incentivizing your team to make it worth their while still getting the results you want?
Yeah, that's an excellent question. And I think when we look at entrepreneurs or people who start their own businesses, most of them are very good at what they do. And the hump that they really struggle to get over is handing it off to a team or systematizing it. And so they're stuck in it. And so for me, I already have a job. I don't want to have this job. I like doing it, but I can't, I've got so much going on. I can't have, all these jobs. And so what I want that business to operate. And if every now and then there's a really nice property that comes along that I want to add to my rental portfolio, I'll keep it. But the rest of it, I just want it to be a machine that hums. And so I'm more than happy to pay people well to make that machine hum. Now, my folks to the north and my folks to the south, those are kind of collaborations where they use my systems. So my mailing structure, my CRM for leads management, and all sorts of other tools that we have in place. And it depends on the deals that they come up with. Sometimes they'll just fund them and close them themselves and they'll kick me a percentage. Other times I'll fund those deals and they'll be the ones swinging the hammers and things like that. So each relationship's a little bit different. For my new guy coming on, we're going to do a 60-day trial period, kind of a probationary is kind of a negative word, but just a trial to see if it's good fit for him and good fit for us. And that'll be all commission based on the front end. If he likes it and really wants to dive into it, we'll probably have a base salary and add commissions, significant commissions on top of that. Cause I want him to be incentivized, with each deal, it'll ratchet up each month. So first deal is X amount of dollars. The next deal is X plus, and then the next deal is X plus plus, so that sometimes we see in the sales world, they get their 1 or 2 sales and then you can coast for the month because because everything is satisfied, and I want to pay them well to be excited about getting the next one.
Sure. And is that something you came up with, or did you learn that? And like, did you hear another investor say it? How did you come up with that strategy?
I've collaborated with a lot of folks in different mastermind groups, kind of hearing how they do it. And straight salary isn't going to motivate a sales position at all. But I've seen a lot of them fail on kind of the commission basis. Because in my opinion, they don't incentivize them enough. They don't pay them well enough. Mm-hmm. But a lot of those people who own those businesses, like, that's all they have. So they need a living for themselves. So they can't give that much away. For me, it's just one leg of the stool. And every now and then I'm going to pluck a rental out. And that's kind of the goal for it. So even if I'm not making money on the regular for it, as long as the team is, and they're spinning off an occasional rental for me, if we're getting 4 houses a month, that's 12 a quarter. 1 out of 12, I should be able to grab one of those as a rental, then I'm meeting my objective. So I kind of came up with it on my own, but it's from seeing what didn't work with other people.
I love it. So instead of just trying to wring every drop of profit out of it, you're like, I'm going to let the team eat, knowing that it's going to get me what I want with like minimal amount of time spent on it, while still providing like a high quality product for myself and my business. So
yeah, I think so. Most of my attention right now, I want my energy to come from kind of the commercial side, because even in the last 90 to 120 days, here's the comparison. My rental portfolio is about 50 houses and it's worth X, and it took me 5 years to build. These 3 commercial deals took 90 days and they're also worth X. So we've done 5 years worth of building in about 90 days. And that's where my energy needs to be. So if I can pay good people to do good work over here and just slowly build that rental portfolio, and they're being well compensated, great. I'm happy with it.
I love it. I love it. That's awesome. Okay. And then you kind of touched on this, but what are you anticipating interest rates are going to do in 2022, and kind of how are you making adjustments?
I don't think it's going to be significant. I think it's going to be slow. I think, so market cycles go about every 7 years, right? And we're in year 13 since 2008. So we were due for one. We've been due for one for a long time. But when you pump this much money into the system, it's going to kind of keep the house of cards inflated for a while. I don't think we start to see rate creep right away, but I do think it will be gradual. It really depends on what we see with inflation. If inflation starts to go out of control, which it feels to me like it already is, right? Like your milk and your eggs and your gas and everything's ratcheted up really quick. I don't think it will be runaway rates. It's not like it's going to jump from, 4% today, 3 to 4% today up to 7. Because it would just absolutely collapse the economy, and no one wants to do that. But I would tell you probably before the next presidential election, it'll happen, just because politics are politics, and they're going to manipulate people to try to create a narrative around it. So I don't think they'll be crazy in the end. Like, I think people obsess about interest rates, though. For me, I want to find opportunities to create value and create cash flow. And yes, rate is an important part of that. But even if rates go up to 5.5, I'm going to adjust my analysis and adjust my purchasing strategies, and we'll find other ways to create value. So
I love it, man. That's awesome. So again, we kind of touched on this one as well, but what about a crash or a big dip coming soon? You think it'll be closer to the election cycle?
I think it will. I would tell folks to watch real closely on inflation, because that's really the next story that's coming up. I think crash is a dangerous word, because we all, like, you and I are of the age where we remember what 2008 was like, and that's what we're all thinking about, right? Like people losing their houses and all that. And I would be surprised if the loss of houses comes back. I think it's going to be more in terms of just the cost of goods going through the roof, things like that. There might be a part of the market that really tumbles, and maybe it's tech, and maybe it's crypto, and who knows. But I don't think it'll be a crash like we're expecting it to be. I don't know. I don't know that that answers your question, but I think everyone's looking for this cataclysmic thing.
Yeah.
And I don't know that it will be that. I think it will be just an extreme market slowing with interest rates that go so far up that it's tough to buy cars. Your job won't provide enough of the income, and the separation between low class and upper class, it will just continue to push away as the middle class starts to dissolve.
Because it'll be asset based. And then those with the
Absolutely.
assets are going to continue to rise, and those without are going to continue to get pushed further down.
Yep.
I got you.
Yep. 100%.
And I wanted to hear you say that too, because I, being in similar industries, with real estate, I get asked pretty regularly about a crash, and it's always tough because being a salesperson, it's like, well, of course, salesperson, you don't think it, like, I feel like sometimes it can come off as I'm biased, but really, like, if I'm telling everyone no crash is coming and then it does, I could have egg on my face. I'm still saying that I don't think there will be, at least anytime soon, just based on fundamentals. I mean, there's an extreme lack of inventory. I think we just have new norms with all the money. Like you said, there's a lot of money that got pumped in, and that's recalibrating what all the norms are versus, what we've been used to. So it's like, we can't really compare it to what happened last time because it's just a completely separate animal.
Well, and it depends on what you call a crash, right? I think we could see an extreme stall, where right now houses are just popping off left and right, and they have all year long, right? Well, it could come to a screeching halt where no houses sell, or minimal houses sell, but that doesn't mean that the values are going to start walking back like they did before. Like when I think crash, I think of, values went up and up and up and up and up. And then 2008, they went straight down because people lost their houses and lost their jobs. And like, to me, that's a crash. I don't know that I see that. I do think we will see a market slowing, and to what degree, I don't know. We might sell 30% of the number of houses because people button down the hatches for a while. So if that's their version of a crash, then okay, yeah, then that's probably coming. I don't know, down to 30%, but you know what I mean? There will be a slowing.
Yeah, sure. No, that's an important distinction. So let's see. What would you tell an out-of-state investor in 2022? Because obviously we're getting a lot of, attention nationally. Having lived in Florida, I've got a lot of friends who reach out to me about investing here. What would you tell the out-of-state investor who's like, Fort Wayne's on their radar and they're thinking about it for 2022?
It's tough to say. I'm kind of split on this because I'm a Fort Wayne boy. I love it here. I want to see Fort Wayne dollars stay in Fort Wayne and support wages and all of that. And so I kind of struggle from time to time seeing those dollars go to other communities. But everyone has a right to come here and play the opportunistic card. In the last probably 24 months, we've seen Fort Wayne be on the top 10 investor list, every single list that comes out, whether it's flips, rentals, cash flow. Like, it's just all this outside money is coming here, and a lot of our peers are selling their investments. And when they do, it's almost always from people from the coasts, one or the other. And it's, we're used to getting better deals, but the deals that we're selling to these people are better than what they can do in the coast. And so I can't blame them at all. And so if it's been working for them, I think it's going to continue to work for them in times to come. And I think Fort Wayne, very specifically, in contrast to the Midwest as a whole, I think Fort Wayne is it's a wise place to park that money, because even if we do see slowing and recession, the influx of people, business, the upward momentum, downtown revitalization, like, there's just, if you're going to put your money in the Midwest, this is a place to do it. I wouldn't put it in Marion and Anderson and Kokomo and some of these little towns that have been okay while times are good, but when recessionary times come, I don't know that that's where I'd want my money. So if you're going to invest in the Midwest, I would stay in cities about Fort Wayne size or larger.
Okay. And then kind of a little bit off topic, but is there any other investments on your radar, like NFTs or crypto or any of that?
Not at all. I think it's fascinating. But crypto right now is not investing. It's speculation. And that doesn't make anything wrong with it. If you enjoy speculating, then have a great time. But I see myself as an investor. And so I want to park my money and let it go to work for me. When I go to sleep and I wake up the next morning, I'm better off. And of course, real estate will go up and down, but people have been making money by doing that since they invented dirt. And it's a slower game. Sometimes there will be multi-millionaires made from NFTs and Bitcoin and all these other things. And I don't mean to get down on them, but they're not investing in my mind.
Mm-hmm.
So
Okay.
it's not the game that I choose to play, but I don't get down on it if that's what appeals to people. It's just, you need to understand, it's like day trading, or it's, you can make a ton of money, but you can lose a ton of money as well.
Yeah, no, I didn't take that as a slight. I think it's important, you're a leader in this space, and I think kind of just getting your take on things is interesting. So
Sure.
Kind of pivoting.
Admittedly, though, I am hyper biased on it. So take it with a grain of salt.
Yeah. Well, hey, at least you can admit it.
Yeah.
So kind of pivoting back to that industrial flex space, and then we can wrap up, but I wanted to just touch on that a little bit more. What
Sure.
initially caught your attention about it? Like, why industrial flex space?
Sure. So to answer that, I kind of take a step back, right? I've done it residential for a long time, 5-6 years. And that's been a good fit. I'll continue to do that. But at some point when you're growing and growing and growing, you realize, okay, if I want to double my income, do I want to double the number of houses that I have? Like, do I want to go from 50 to 100? Probably not. That's not a very scalable way to grow your income. With 50 houses, you have 50 roofs and 100 toilets and tenants, 200 or 300 tenants across all of these places. And so the idea of how do I scale kind of came into play. And so multifamily is something that all the cool kids are doing, right? I've seen trends in investing. They kind of, for one moment, it's going to be trailer park homes, and then it's going to be storage, and then it's going to be multifamily, and then it's short-term rentals. And right now, everyone wants multifamily because it's on social media everywhere, and people have had a lot of success with it. And it's an amazing tool. Here in Fort Wayne, there's not a lot of opportunities. Houses have been so cheap for so long that people have just built houses. We don't have tons of older apartment complexes. We're starting to see the newer ones pop up now, but we don't have a lot to buy. And so after about a year or so of really going after them and not getting a lot of traction, I said, okay, it's the right tool, but everybody wants it. So what sort of assets can I look where no one else is looking? And that's kind of what led me to industrial flex. It's not a sexy asset. You throw a picture up on social media of a warehouse and it's just not as cool as the granite countertops and the lights. And, it just doesn't sparkle like anything else, but the scalability of that business and how passive it can be is incredible. So for me, I want to have one tenant, maybe 2 or 3 across the warehouse or 2. And, they're going to call me during business hours. They're responsible for all things in that building except the roof. They pay for the taxes, they pay for the utilities. Like, it is a completely different animal. And so we'll see how it plays out in the long run. But like I said before, the value of those 50 doors we've created in about 90 days. And so it feels like we're on the right track.
Okay. And is there a lot of competition in that space? How's the inventory in that space?
It depends, kind of the price point that you're looking for. If you're looking at $500,000 buildings or less, there will be some more competition because more average investors can afford that. They might come up with $100,000 down payment and be able to acquire the rest of it, or businesses themselves might buy that building to run their own business in. You get above about $1 million to $10 million, and that's much harder for people to come up with the money that they need to get into those assets. And we all put limits on our own mindset, right? So to think that you could go out and buy a $3 million building, people are like, that's crazy. I'll stick with the small stuff. Beyond 10 million, you start getting into more, what's the word I want to use? Financial buyers like groups and REITs and investment type groups that will come in, institutional buyers,
like
and
funds,
yep.
and hedge funds and stuff like that.
Yep, exactly. And so I feel like kind of like with multifamily, like there's this magic between 12 doors and maybe 60 because they're too big for the little guys, but too small for the big guys. kind of similar with the industrial flex space. But you have a lot of individuals who are looking to retire and they want to buy cash flow. They want to buy an income stream. And that's really kind of who our competitors are in that space. And there's not many.
Are most of these sellers like mom and pop, like, people who maybe had a business, bought the building, and then have held it all these years? Are you dealing with more institutional money on the sell side too?
The majority of them kind of are that mom and pop person who bought their building and worked out of it. And now they've sold the business and now they want to sell the building or something along those lines. The South Bend seller, for example, though, was someone who bought it years ago. And now they buy 10 million, 40 million, $90 million buildings. And this one was so tiny compared to everything they have. They just didn't want to put the time and energy into it. And so we were able to buy from them, and they were a very sizable seller. So,
okay. And you're thinking buy and hold for all these? Are you looking to maybe turn them over, if somebody makes you a strong offer?
Yeah, it's a good question. It depends on which one we're talking about. For example, South Bend could be one of those where we finish out the build that needs to happen there. We lease out the units, and it's kind of right in the path of progress downtown. I would tell you South Bend's downtown is probably 4 or 5 years behind ours. So people aren't really looking at it, but they're investing like 260 million on our street in the next 2 to 3 years. And so I think while we do our work, the city's going to do their work. And in 2 to 3 years, if someone gives us a silly offer, then we'll almost have to take it, and we will 1031 that money into the next big thing.
Okay. What are some of the risks in this space? We obviously know, for example, like where most people are familiar with is like flipping, and the risks there are, you have to hope the market holds strong in the time that it takes you to turn it over and hope that nothing happens or comps don't change. What are the risks in this space?
Yep. Yeah, I think the speed at which it moves is a totally different thing. And what I mean by that is on the residential side, it might not feel like it's very fast, but 90 days to flip a house and sell it is crazy fast. Even if you're going to rent it, right now, rents in Fort Wayne, you can fill anything up almost overnight if you have something decent at all. Mm-hmm. In the commercial space, you will generally have tenants that come in there and then they'll stay for 3 to 5 years. But when they leave, you might sit with 6 to 9 months worth of vacancy. And that's really the risk, is having a lot of vacancy all at once and still having to make payments on loans that are, in the 7 figures. So you need to have your 6 months reserve at minimum. For the commercial side, it's just a lot more money that you have to sit on. But for those of us who are painfully impatient sometimes, you just have to learn to do all the right things to get it ready. And then you just got to sit back and wait for that tenant to show up.
So when there is turnover, is there work that needs to be done? Or like, let's say the building's been built out for a specific type of business. Do you wait until someone comes along and say, hey, we'll change it? Or is that on the tenant, or how does that work? How does the turnover work?
Yeah, generally speaking, the tenant will come in and they will want to build it out to their needs. But if we have right now in South Bend, one of our units is a very bizarre space. It'll be a fantastic space, but we need to do what they call white boxing. So we're going to go in and we'll white box that unit and basically throw white paint up just to make it very clean, maybe some new carpet or new flooring. And then if we need to remove some walls just to open it up or get rid of that goofy, desk or whatever that they built right in the middle of the office, we're going to do that on some of our units. And that allows a new tenant to come in and be more creative mentally with what they can do to the space. In a hot market, you don't have to do that. They're going to come in and build it out their way anyway. But if it's built out very strangely, then yeah, you probably need to white box.
Just get it back to neutral and let people envision what they could do versus get hung up on something that's maybe quirky or limiting.
Yeah, especially on the commercial side. On the industrial side, a warehouse is a warehouse with offices. So unless it's in poor shape and you need to do some remediation, then it kind of is what it is.
Okay. And what advice would you have for someone jumping into this space? If, I'm sure it seems like the progression is kind of flipping, buy and hold, single family, then small multi, and then people get into, either commercial apartments, that type of thing. So if someone's looking to scale up, what advice would you have for them?
I would tell you, regardless of residential, commercial, whatever niche you want to get to, it is essential to network with people who are doing it. And how do you find them? There's a million ways online. They didn't exist 5, 10 years ago when we were starting our journey, but there are tons of mastermind groups. I'm not a big fan of people going out and paying 20 or 30 or $40,000 to follow a guru to figure out certain things. But I have found great value in finding mastermind groups where it's 6-month commitment, 12-month commitment, and it's a collection of people who want to learn the same thing that you're doing. And they'll have 1 or 2 leaders in that group, but there's usually a community, be it a Facebook group or a Slack channel or something like that. They might meet up every other month or something like that in person, but just every week you'll have content and Zoom calls and all that kind of stuff. And so for me, that's been absolutely invaluable. And then of course, having a partner here in town who has some experience and some complementary skill sets has been fantastic. So networking is everything.
Okay. And I'll do it for you. Plug the Fort Wayne REIA. Is there anybody there that's getting into this space? Or I know you kind of said that was part of the reason you wanted to go there, was there's less people looking, but are there any locals that are in this space?
There are some. What you find, my limited experience has been the majority of these folks tend to be a little bit later in life, either because they've realized they've been working themselves to the bone and they want something a little more passive, even if they make a little less. Or it's people who have been investors for years and years and years, and now they want to go off and do that. And historically, REIA groups have just focused on small investments, a house here, a house there, maybe a duplex, things like that. I think one of the opportunities for us is really to start helping people understand that you don't necessarily have to pay your dues on the small stuff. Why can't you go big right out of the gate? And so I think we'll start talking more about some of the commercial stuff and bigger stuff.
That's great. I've actually got a personal friend of mine, and he's doing his first house he ever bought was Airbnb. He bought 2, and now he's doing essentially like building out a condo conversion. That's only like his 3rd deal ever. Yeah. So
yeah, that's amazing.
You don't have to start small. Well, Drew, you're the man. I really appreciate your time today. Is there anything you want to plug before we go? I know you have the YouTube channel, The Flying Investor. Is there anything else you want to plug?
Yeah, that's probably the best way to find me, either on Instagram or on YouTube. You can search The Flying Investor. We dropped an episode just the other day, and I'm going to try to create more of that content. Other than that, the REIA group is free for everyone. You're welcome to come out to that. You're always welcome to try to, message me directly if you have questions or things I can help you with. Admittedly, as my world gets bigger and I scale, I'm struggling more and more to keep up with messages. But if you're patient with me, I'm more than happy to respond as frequently as I can.
Yeah, and all the more reason I'm thankful for your time today. And I know that the city looks up to you, and people look to you as kind of like a guiding light, doing the right thing, but also pushing yourself and calling it like you see it. So thank you so much for your time today, and I'm looking forward to the next one.
Yeah, well, thanks for having me. I appreciate it. It's always a good time.
All right, see ya.
Yep, take care.